Residential rentals. Did you know that the interest deductibility is being stepped down? And if you buy one at the moment, assuming it's not a new build, you get zero claim on the interest costs. Is that a big deal? Huge deal. Huge deal. And it's something that a few people aren't aware of. So basically what we're talking about, let's talk about Dunedin homes. Generally speaking, you might be looking at about $30,000 worth of rental income. You've obviously got rates, insurance, repairs and maintenance that can be claimed on that. But your biggest cost is the interest on the mortgage related to that property. Historically, you've been able to claim that interest, and it could be ranging anywhere from 15 to 25,000. Nowadays, you're only able to claim a percentage. So that means that your rental property is making an artificial profit. The reason why I say artificial is because you still have to pay the bank. You're still paying the bank the interest, but because you can't claim the interest as a deduction, you're receiving a profit, which means you're going to pay tax. So it does mean that potentially your rental property is already in negative cash flow, and you need to pay tax, which makes it into even more of a negative cash flow position, which means you're topping it up all the time. Definitely something worth considering, specifically in the current market when you might have to meet the market to sell the property. We also need to consider Brightline. There's a lot of things to consider. So if you do have rental property, if you're looking at buying a rental property, I seriously recommend that you reach out to an accountant. It doesn't have to be us. We do deal with it quite regularly. Most probably do. But we do recommend that you have a conversation and look into it so you understand the tax implications of what you're doing. Let us know what you think. Cheers.